Hey guys, this is Nick from forexfornoobs.com with Forex Education Friday, where every Friday I bring you a free Forex education video. Now unfortunately, last Friday I was unable to shoot the Forex education video, so this Friday I'm bringing you something special. This is not just a short video, this is a full webinar. Now this webinar was shot about 4 weeks ago, and I haven't publicly released it on Forex for Noobs yet. So some of you might have seen it if you attended the webinar, but now I'm releasing it to everyone. Check out this webinar. It's about candlestick analysis. It got a bunch of great reviews. People loved it, and I'm sure you're going to love it too. It goes for 40 minutes, so you may want to pause this video and come back to it when you can put 40-45 minutes aside to actually get through it all. So I hope you enjoy this webinar.
Alright, so I've been told to start off webinars by saying a little about myself. I really don't like going on about myself for ages, but I've been trading for about 10 years now, maybe 11 years, I'm not really that sure. Forex for 8 of those years. I've been trading Forex since I was 18 years old. My trading career started when I was 16. We had a competition in my economics class called the stock market game. So we were given a $50,000 demo account, or $100,000, I can't really remember. But anyway, it was a demo account, and we were told to trade the stock market. Whoever ended up with the most profit by the end of the few weeks the game ran was the winner. To cut a long story short, I ended up winning this competition. After winning this competition, I thought I was a trading god. I thought I was amazing, and I was the best trader on the planet. But then I started live trading, and reality kind of caught up to me, because part of the winnings for the competition was that I got my own stock market account with I think $1,000 in it or something like that. And I'm not saying that I lost. I was still profitable, but trading real money is a lot harder than trading demo money. I was just above breaking even in my stock market account for quite a while. I spent my last 2 years in school trading stocks. And when I finished school, I decided not to go to university. I decided to pursue trading instead. And to be honest, I didn't really have the grades for university. And that's pretty much because I spent my last 2 years of school in the back of the class trading and not doing my schoolwork. So not surprisingly, I didn't do too well in my exams. After school, I kept trading stocks, and eventually I found Forex. It took me about a year to put my trading strategy together, and another year before I considered myself a successful trader. So it took me about 2 years to figure out Forex trading. But keep in mind, I lived at home with my parents at the time, so my learning curve was shortened dramatically. I mean, I didn't have the responsibilities of an adult, cooking, cleaning, paying bills, and all of those things that, take up our time. After I became consistently profitable, out of boredom, because Forex is a lonely career, I decided to open Forex for Noobs. I opened Forex for Noobs back in 2006, and I've been teaching price action ever since. So Forex for Noobs is pretty much the first Forex site online that teaches pure price action trading. And I actually found this today in my old files. This is Forex for Noobs back in 2007. And you can see, even back in 2007, I was teaching people to throw your indicators in the bin. Check that out. So I've been teaching this same strategy since 2007. So that's 5 years now. And actually the site opened in 2006. So I've been teaching it since 2006. So I've been teaching this strategy this long because it works. It's not some strategy that I make up and then a year later I have a new strategy. My strategy has evolved in these 6 years. It has changed, but essentially it stayed the same because my strategy is based on price action, and price action is the core of all trading. And in today's webinar, I'm going to show you the first step in throwing all your indicators in the bin and trading using just the information that your chart gives you. I will show you how price action works and how to use candlesticks to spot and exploit weaknesses in trends. I will also go over some cool price action techniques that I use to determine turnarounds or reversals in trends, and I will show you, after that I will show you some of the trades I've taken recently using candlesticks. So some of the trades I've taken over the past few weeks. This way you can actually see how I put the stuff that I'm showing you in this webinar into action. So I'm not only going to show you some price action theory in this webinar, I'm actually going to show you how it's used, how it's been used in the past few weeks on my charts. And finally, at the end of this webinar, you're going to be able to grill me on candlestick trading. So I'm going to open up for questions, and you can ask me whatever questions you want on candlestick trading. So, oh yeah, and I forgot. I'm also going to be sharing a free bonus right at the end of this webinar. The last thing, I'm going to share a free bonus. The bonus is something that you could put into use right away to make pips in this coming week. So the bonus is something that you can put into use to make pips next week if you use it in conjunction with what I'm teaching you today. So stick around to the end of the webinar for that bonus. It's going to be worth it. Okay, so to start with, I'm going to go over some basics. Those of you who've been trading for some time and have got a little experience, or have been around Forex for Noobs for a while, you may know all this stuff. But there are a lot of newbies here tonight. There's about 200 people in this room right now, and the room keeps filling up. A lot of newbies here tonight, so I need to go over the basics. So, for those of you who already know this stuff, you could tune out for about 10 minutes while I go over it. So let's get started. Now recently I done a survey on Forex for Noobs and a bunch of other Forex websites. The survey was of about 400 traders. One of the survey questions was, do you use indicators? And if so, how many? Two of the answers to this question surprised me quite a bit. The first was that I did not expect as much as 17% of traders used no indicators. So this surprised me because I thought the number would be much lower than that. But these survey results, and it was only 400 people to be fair, but these survey results showed that a lot of traders out there are not using indicators anymore, which is pretty cool. I mean, it shows that a nice population of the trading community are starting to trade price action. But the other thing that this survey showed, and this was the biggest surprise, 23% of traders use 5 indicators or more. And that's just like too many indicators. I'm surprised these people can even see their charts for all the indicators they have. The survey showed that the majority of traders are using around about 2 to 3 indicators. Personally, I think 3 indicators is a little too much, let alone 5. But, 3 indicators is manageable. I used to be pretty close-minded when it came to indicators. I was totally against them, and I advise nobody to use them. In recent years, I've come to understand that indicators do have their place in Forex. They can help with analysis, they can help confirm trades, but in my opinion, they should only ever be used secondary to price action and analysis. Most indicators simply take price action, feed it through a formula to simplify it, and then chart it in their own unique way. Sometimes this simplified version can be useful. However, looking at the raw data is always the best option. The raw data is so much more informative, and the raw data is what the indicator uses to draw its little graphs. So if you can look at the raw data, then you're always going to have more information than what the indicator gives you. And the raw data is essentially price action. And having a firm understanding of price action, and what it is doing at any one moment is the key to trading Forex successfully. And every trader here has the absolute perfect tool, an amazing tool, the perfect tool for understanding what price is doing, and that's the candle chart. A candle chart gives you all the information you could ever need about price. It allows you to see shifts in price long before they actually come, so you can trade those shifts, and that's what I specialize in, and it's what I'm going to be talking about today. So let's take a look at some very basic candle concepts. This stuff is easy, like I said, but we need to go through it for all the new guys here, so just stick with me. So what is this line here? This line is a baby candle. It's a candle as soon as it opens, as soon as it's born. It's just a neutral line. It has not decided yet if it will become a bullish candle or a bearish candle. or if it's going to remain relatively neutral. Over the course of 4 hours, that's on a 4-hour chart. On an hourly chart, obviously it's over the course of an hour. So over the course of 4 hours, this candle will grow and develop. If this candle develops into a bullish candle, it's telling us that the bulls are in control of the market. Again, I know this is simple stuff, but what I'm trying to instill in your mind is that this isn't just a white rectangle that tells you what price is doing. This candle is a message from the market that tells you that the bulls have power right now and that the bears have no power. If you think about candles like this, you can start to understand price and what it actually is. So this candle is not just a white rectangle that represents price. This candle is telling us the bulls are in control. Buyers are controlling this market, and bears, the sellers, they're nowhere. They're dead at the moment. So if this candle, our little neutral candle, develops into a bearish candle, what's it telling us? Well, that's telling us that the bears are in complete control of the market and that the bulls have no power. So this is how you need to think about the market. You don't just look at a chart and think about, it's going up, it's going down. You have to think who is in control of the market. And that's what candles tell you. Now think about this when it's spread across an entire chart, like this. Now we start to see bull trends, the ones highlighted in green, and the bull trends are made up of what? You guessed it, bullish candles. The bear trends, highlighted in red, are made up of bearish candles, bear candles. And just think about this for a second. A bullish trend is a bullish trend until it isn't. Now I'm not talking gibberish, just think about it. A bullish trend is a bullish trend until it isn't. A bullish trend is a bullish trend right up until the bulls lose power and the bears gain power. Then at that moment, a bull trend becomes a bear trend. If you learn to anticipate that moment, if you learn to see that moment coming and exploit it by entering a trade, then that's when you start making money in Forex. So a bullish trend is a bullish trend until it isn't. And what you need to be able to do is figure out when a bullish trend isn't a bullish trend anymore and enter a bearish trade. To do this, you need to understand the 4 stages of price. So stage number 1 is ranging, then there's bullish trends, bearish trends, and transitions. The 3 important ones are the ones highlighted in red: the bullish trend, the bearish trend, and the transition. And check them out on this chart to see why. Okay, so these are the stages. Green is the bullish trend, red is the bearish trend, and blue is the transition. So this little blue area highlighted here, this marks the transition between bullish trends and bearish trends. So this is the bullish trend, the green one. This little blue area here, it marks the transition between the bullish trend and the bearish trend. And this ties into what I was just saying to you. A bullish trend is a bullish trend until it isn't. Now I know that sounds like gibberish, but a bullish trend, this trend here, is a bullish trend until transition forms and it becomes a bearish trend. And a bearish trend is a bearish trend until it isn't. A bearish trend is a bearish trend until transition forms and it becomes a bullish trend. And then transition forms here and it becomes a bearish trend. So the market, it tends to move in transitions, and also in ranges. Ranges happen sometimes, when the market moves sideways, and you can't really do much trading in those periods. But what we're looking for is those bullish trends and those transitions into bearish trends, and then from bearish trends we're looking for transitions into bullish trends. So the key is transitions. By identifying transitions, you can predict the depth of trends and enter reversals. So price action analysis, like I said, is the key to successfully trading the Forex market. And transitions are the key to successfully trading price action. So today I'm going to show you how to spot one particular type of transition. And then I'm going to show you how I used it over the last month to make loads of pips. Now, I use more than just one type of transition to identify reversals. But today I'm only going to show you one type. The reason I'm only showing you one is because it would take hours to cover them all, and in a webinar we only have about 1 hour. So today I'm only going to show you one type. But this reversal is quite a strong type, so it's going to be useful for you. Okay, so this reversal setup here is broken up into 3 parts. Part 1 is highlighted in green and it's the preceding trend. Part 2 is highlighted in blue and it's the transition. Part 3 is highlighted in red and that's the reversal trend. So let's use what I've told you so far to dissect each of these 3 parts. The preceding trend, the first part, is dead simple to dissect. In this case, it's just a bunch of bullish candles. So a bunch of bullish candles, I've already gone over this. What does it tell us? It tells us the bulls are in control of the market. But then we get this little indecision candle here, the one highlighted in blue. Now this candle is the hardest one to read out of all these candles, but it's the most important one. This candle, it tells us that the bulls tried to push up. So they tried to push price up, but they just couldn't make it. The bears didn't want them to keep moving up. The bears told them that they're going back down, and they pushed price back down, and they pushed it down below its open, which is another significant sign because the bears were able to make a new low. So think about what's happening here. We went from a bullish controlled market where the bulls were in complete control, the bulls were in power, to a market where the bulls try to push up and the bears just flood the market and push them back down. So what does that tell you? That tells you that the bears are trying to take control of this market. And that is what a transition of power is. So this candle here, it tells us that the bulls are growing weak and that the bears are taking over. And the next part that's highlighted is, again, easy to dissect. It's just the reversal trend. It's a bunch of bearish candles. So see how this transition of power works. We went from a bullish controlled market to a bearish controlled market, and the sign that that was coming, the sign that that shift, that transition was coming, was this little candle here. And these candles form a lot, and if you know how to look for them, then you can make a lot of pips. So let's take a close look at this candle so you can learn some of its characteristics before I switch over to my live charts and I'll show you some of the trades I've taken using this candle in the past few weeks. So this little candle alone has made me hundreds of pips this year, and this type of indecision candle is one of the strongest types of indecision candles. It has 3 main characteristics. If it forms in a bullish trend, so if it forms in a bullish trend like this one, the first characteristic it has is a large upper wick. So the large upper wick is a very strong sign that the bears are going to take control of the market, because that large upper wick tells us that the bulls tried to push up, but then the bears took control and reversed the trend. So the first characteristic of this candle is a large upper wick if it forms in a bullish trend. The second characteristic is a small lower wick. The lower wick doesn't necessarily have to be as small as it is in this picture, but generally speaking it has to be around about half the size of the upper wick. So if it's half the size of the upper wick or smaller, then that's okay. Now the third characteristic is a small body. So this is a small body here. Ideally, you're going to want to see a small bearish body if it's forming in a bullish trend, because that's opposite to the trend, so that's a strong sign that the bears are taking control of the market. So ideally, you want to see a bearish body, but it's not essential to have a bearish body. I mean, even if it has a small bullish body or a neutral body, so you know if it opened and closed in the same spot, it's still a indecision candle, and I would still enter a trade based on it. Just as long as the body is small. You want the body to be small, maybe a quarter the size of the upper wick. Now let's take a look at the same pattern, but just on the opposite side, if it forms in a bear trend. So it's pretty much the same, but opposite. So if it forms in a bearish trend, we want to have a large lower wick, because a large lower wick suggests that the bears tried to push down, but the bulls turned them around. And we want to have a small upper wick, because that small upper wick, it tells us that the bulls tried to push up and they didn't really get reversed. I mean, the ground that they gained, they were able to keep, which is a good sign. It tells us that the bulls have control of the market. And number 3, ideally we want it to have a bullish body, but like I said with the previous example, if it has a neutral body or if it has a small bearish body, that's still okay. But the strongest ones, they have bullish bodies if they're forming in a bearish trend. Does anybody want to take a guess why this candle is so powerful? Feel free to type it in if you want to take a guess. Alright, those are all good answers, guys, but that's not why it's so powerful. This candle is powerful because these candles usually form when institutions and banks start to enter the market. The truth is, in Forex, retail traders like me and like you, I'm a retail trader. You know, I have a large account, but I'm still just a retail trader. I'm a small guy compared to the banks and the institutions. My positions are tiny. So retail traders like us, most of the times we make no money. You know, there are some of us that make money, me for example, but most retail traders are losing money, and they're losing tons of it in Forex. So these candles here are a sign that the retail traders are losing money and that the bulls are starting, sorry, not the bulls, the banks and the institutions, they're starting to enter the market. And the only way you and me can make money in Forex is by looking for signs that banks and institutions are entering the market and then trading with them. So these candles are so powerful because what these candles are really telling us beneath it all is that the banks, they're starting to enter the market. And when you start seeing something like this, that the banks are entering the market, that's when you want to jump in, because you want to jump in with the banks, because the banks, those are the guys making the money. So we're going to start with a 8-hour AUD USD chart. I'm going to take a look at a recent trade me and the Super VIP, sorry, the advanced course members took on this AUD USD 8-hour chart. And this is it. I've marked it out here. So let me remove that line. This is the trade that we took recently. This is an AUD USD 8-hour trade. It was quite a good trade, actually. It was quite a big trade. And here it is. So this trade worked pretty much like I was explaining when I was showing you the slides. We got that nice bullish trend. Now this bullish trend only consisted of one candle, but that's fine. I mean, bullish trends can consist of only one candle as long as it's a big candle. And then we got this little pattern. Now this is the pattern I was talking about. The wick on this one, the lower wick, is a little big. Ideally, I'd want it to be smaller. But I'm showing you this one because, you know, when I show you examples on slides, you know, I'm showing you perfect examples. When you get out into the real world, you know, you're not always going to get those picture perfect examples. You're sometimes going to get examples like this where the wick is a little too big and you're not quite sure. But you just have to learn to go with it. I mean, but you're not always going to get those perfect examples. So in this case, the wick to the short side was a little large, but it wasn't large enough to make me not take this trade. So this was a great little setup. I mean, we got the bullish trend. We've got, you know, this candle that I explained. Now, it did have a bullish body. Now, ideally, we want them to have bearish bodies. But like I said, it's not a deal breaker as long as the body is small, and this body is small in comparison to the upper wick. So this was a perfect little setup. I mean, just think about what it told us. Bulls were in control of the market. It came up to here, to this resistance area. It tried to push up through it, but then the bears took control and they pushed price down. The candle closed with a small bullish body. Then the next candle came along, and it barely moved up before the bears took control. They made a new low here, and that was it. I mean, this trade was dead simple and worth quite a few pips. This is what I was trying to show you in the slides. Okay, I'll just explain where I entered on this one. On this one I entered here because it was the low of the indecision candle. So I entered short on the low of the indecision candle because the bears made a new low, and that's significant. When the bears make a new low, that tells you that the bears have in fact taken control of the market, and that's why I entered short here, and my target was down here, so it was worth quite a decent amount of pips. I think something like 60 pips, something like that, if I remember correctly. Let's take a look at this AUD/USD 4-hour chart. Now this is a 4-hour chart, and these are a few trades that we took recently. So Alvin is asking about my previous trade. He said that I entered short, but the candle hadn't closed. Now I don't wait for the candle to close to enter short. I really don't see why anyone would want to wait for a candle to close. If you wait for the candle to close, the move is more often than not already over. I'm trading price action, so I don't care when the candle closes. What I care about is when the bears tell me that they've taken control of the market. That's what's important. And the bears told me that they took control of the market the second that they created a new low, the second that they broke the low of the indecision candle. So the second they made that new low, I entered short because that was a sign to me that the bears were taking control of the market. So I hope that answers your question, Alvin. So this is an AUD/USD 4-hour chart, and these are some trades that I've taken recently on this chart. This was just about a month ago now. So we had, let me highlight it here for you guys. We had a very strong bearish trend, It came down here into this area of support, and it formed this candle I've been talking about, this candle I've showed you a bunch of examples of. Has a long lower wick. This time it has a bullish body, which is a really good sign, and it has a small upper wick. So this candle immediately told me, you know, I have to start looking to get into this market. And I can't remember exactly where my entry was on this trade, because like I said, it was about a month ago, but I assume it was somewhere about up here. I mean, I can't see myself having entered much higher than that. So, you know, this was a simple, straightforward trade. You get indecision forming on support, and it's this specific type of indecision candle. This is the easiest type, the strongest type of indecision candle. Like I said, there's a bunch of other indecision candles that I trade, but this is the strongest one. This is the one that's most common, that makes me most of my pips. So this candle formed, entered a long trade, and got out up here. This candle, yeah, that's an indecision candle too. And I cannot quite remember if I entered this and it was a failed trade, or if there was a news release here and I didn't enter because of the news release. But my suspicion was that with this one here, there was a news release, and that's why we had the price rocket up so fast here. I could be wrong about that, but I'm pretty sure it's going back a month, so my memory's a little hazy. I'm pretty sure that that this indecision candle at the top happened just before a news release, and this this bullish candle here came after the news release. But like I said, don't quote me on that. I could be wrong. This could have just been a failed trade, because, you know, failed trades do happen. I mean, you know, you're not going to be able to win every trade. Volta, can you explain some losing trades, not only winning? Honestly, I don't think I've taken any losing trades with this candle specifically for quite some time. I've taken some losing trades recently with other types of indecision candles, but today's webinar is on this specific type of indecision candle, so I'm not sure what I can show you, but I'll have a look at my charts to see if I can find some failed ones. There you go, Brad. Thanks for that, Brad. Yeah, Brad tells me that that was non-farm payrolls. So this was indecision, but it wasn't entered because that was non-farm payrolls there. So yeah, that wasn't a failed trade. That was just news. Okay, so let's take a look at another example. I think I have an actual really recent example this week, in fact, where now this trade was actually not spotted by me. It was spotted by someone in the advanced course. They posted it in the advanced course forum. I saw them post it, so I jumped in. So one of my students actually alerted me to this trade, funnily enough. But this was a great little trade. We had the bears. Wait, let me highlight this for you guys. We had the bears drop down into this area of support. This area of support we had marked out. And we had this candle pattern I've been talking about form. Now it did have a bearish body. Like I said, ideally we wanted to have a bullish body, but it did have a bearish body, but the body was small. And that's the main key. The body was small. The wick to the downside was quite big. We had a large wick to the downside, and we had a small upper wick. So that was a pretty nice indecision candle. And the entry for this one was, I can't remember. I had it written down somewhere, but it was around about up here. So the entry was around about up here, and like I said, this was a dead simple trade. I mean, it pushed up, broke our entry, and over the course of this 8-hour candle, it just rocketed up, and this trade was worth around about 80 pips. So it was quite a big trade. It was worth around about 80 pips. For me, that's quite a big trade. There's another example right here. Came up into this area of resistance up here, and this is the setup here, and we've got that same pattern, that pattern I've been showing you. We got that pattern forming. It did have a bullish body, but the body was small. It had a small lower wick, strong upper wick, forming in a bullish trend. You know, just a perfect sign that the bulls are losing power. And the fact that it's forming on an area of resistance is a clear sign that the bears are going to take control of the market. And they did. And I entered somewhere around about up here, and I wrote it down, I think, for 60 pips, if I can remember correctly. Which broker? This is GFT. It's Deal Book 360. I know a lot of you guys don't have access to 8-hour charts. Anyway, guys, now we can open up for questions. I mean, I've explained this setup. It's a simple setup to understand. This is the first in a series of webinars where I want to discuss candle patterns. So there's going to be a webinar in a few weeks where I discuss a different type of indecision pattern. But, you know, I was going to start with this one because it's the easiest one. It's a simple one to understand. Next time we're going to talk about a different kind of setup that's a little harder, but that is almost as profitable. Trade Interceptor is a really good app. Wait, I'm going to move this here so people who are watching the recording can actually see the conversation. Trade Interceptor, someone just mentioned, it's a really good app that has 8-hour charts available. It's available on iPhone, on Android. I have it on my Android. I just got it last week, in fact, but it's actually really good. Paul, the last candle on my chart, would that be the sign of a bearish trade? No, not really. The reason for that is, number one, it hasn't formed inside the area of resistance, which for me is a requirement to take a bear trade. And number two, this formed on Friday. What happened on Friday doesn't continue on Monday, in my opinion. So I wouldn't take that as a bear trade. Andreas, is my stop loss below the low of the pin bar if I'm going long? The answer to that is, well, it depends sometimes. But yeah, I try to put my stop loss below the low of the pin bar if I'm going long. Brad said, seems the area of resistance is important to explaining this pattern. Yes, the area of resistance is important, the area of support is important, and that's part of the bonus I'm going to be giving you at the end of this webinar. I'm going to be giving you a pretty cool bonus that allows you to see all these support and resistance areas, and that's going to be given to you at the end of this webinar. So you'll be able to use these support and resistance areas along with this pattern that I've shown you to take some trades in the coming week. And Jury asked if I move my stop loss to break even. When I enter a trade, I usually enter with two positions. My first position targets roughly 30 to 40 pips on most pairs, and then my second position usually targets the next area of support. So for example, in this trade here, my first position would target roughly around about here, something like that. My second position would target all the way down here. Once my first position is hit, I would move my stop loss to break even. So I'd move my stop loss to my entry, and then my second target would be down here. Once that's hit, I would exit both positions and the trade would be closed out completely. Where do I get my support resistance from? Paul just asked. I don't get it from anywhere, I place them myself. Now I do explain how I place support and resistance in my free Forex strategy, which is up on Forex for Noobs, and again, the bonus you're going to get is going to be about the support and resistance lines. FBI Business just asked, I am still not clear on the time of day you know when to trade. You don't sit at the screen for 8 hours to see the trends. What am I missing? I'm not sure what you're missing. I mean, I don't sit at my screen for 8 hours a day. The beauty of trading 8-hour charts is that you only need to check them once every 8 hours to spot indecision candles and to spot trades. If I check my chart here, this is an 8-hour chart, and then the next time I check it is here, that's 8 hours between the open of this candle and the close of this candle. Next time I check it is here, that's another 8 hours. So you don't have to check your chart too often. Every 8 hours, that's not much at all. 4-hour charts, you check every 4 to 8 hours too. I don't sit around looking at my charts all day. I check in every 8 hours or so. I see what's forming. You can see these setups coming a long way away. Why are you switching to 8-hour? That's a good question. I'm switching to 8-hour charts at the moment because they're just much cleaner. I just love the 8-hour chart. If anyone ever told me that they won 95% of their trades, I wouldn't believe it. But I am actually winning 95% of my trades on the 8-hour chart. Not on the 4-hour chart, but on the 8-hour chart. I'm winning 95% of my trades. And that's just a crazy percentage, a crazy win percentage. The 8-hour charts, they're just unbelievable. They make me so much profit, they're so consistent. And you can see moves coming so far off. I just love the 8-hour charts. I'm just in love with them. I didn't even discover them myself. A member of the advanced course said to me once, Nick, do you look at 8-hour charts? And I said to him, why would anyone look at 8-hour charts? It's stupid to look at 8-hour charts. No one trades 8-hour charts. But then I had a quick look at them and I have to admit I was totally wrong. 8-hour charts are great. I switched to 8-hour charts because they're just more consistent. You can see moves coming a long way off. You have to check them less often. Anyway, so move on to the next question. Phil, future webinars, will you be discussing other indecision patterns? Yeah, I said that about 10 minutes ago. Future webinars, I'll be discussing other indecision patterns. This webinar is an introduction to indecision patterns. I'm discussing the most basic and the most simple indecision pattern, but in future webinars I'll be discussing some more advanced ones. So this is just an introduction, guys. More advanced stuff is coming in the future. And guys, I think that's it for questions. I mean, there's just so many questions coming in. I can't answer these all. It's just going to take me another hour. Okay, and Antoine, I will answer your question since you've asked it twice and I've missed it. So I'm going to answer your question real quick. You want to see a USD CAD 4-hour chart, is that right? USD CAD 4-hour, I think I had it up here, didn't I? Maybe not. Is this the trade you were talking about here? I took this on the 8-hour chart. So it's the same trade, I took it on the 8-hour chart. It looks a little bit better on the 8-hour chart. It's not the same pattern we were talking about today, but since you asked nicely and you asked several times, I'll quickly show you it. So we had the bulls coming up into this area of resistance, and they bounced off here. This area of resistance, indecision formed. It didn't have that long upper wick, but it was still indecision. It's another type of indecision pattern. A type I'll discuss in future webinars, but it's still a strong type. I entered a short trade. It was an easy short trade. Made tons of pips on this one, or tons of pips for our USD CAD. I think it was around about 50 pips. So yeah, Antoine, that was a trade. I traded it on the 8-hour, not the 4-hour, but it was the same trade. Okay, so first things first, the advanced course. I've talked a little about it today. Anyone who's interested in joining the advanced course, recently when I do a webinar, I've been putting the advanced course on special, $50 off, which is quite a significant amount off the advanced course. It's basically a video course plus a private forum where we discuss trades and stuff like that. And I also do weekly webinars. So these are webinars with a small group of people where I discuss the trades I took last week and the trades I'm going to take in the coming week. If you click that link, it's going to take you to a page where you get $50 off the advanced course. You have to join in the next 24 hours to get that $50 off. And I know a lot of people say you have to join in the next 24 hours, but seriously, this is 24 hours. If you come back in 24 hours, that special is going to be off and it's going to be back to the normal price. I promise you that. So watch the video on that page because it tells you everything that's in the advanced course. And now what's next is the bonus. The bonus for you guys. Some of you guys may already have this bonus, but for those of you who don't, if you look at this bonus, it's going to give you those support and resistance areas. It's quite a good bonus because it allows you to place these same support and resistance areas I have on my chart. Therefore, it allows you to take the trades I've been taking. So check out that bonus. I update them regularly. I don't think I updated them last week, but I update my support and resistance areas regularly on that page. So you should be able to get access to my latest support and resistance areas if you keep that page. Yeah, Brad, in the course I show everything. I show how to calculate support and resistance areas and all that kind of stuff. I show my whole strategy. So my whole Forex strategy from A to Z, from the basics to the advanced stuff, I go over it all.